Jarrett Lau here with Profitable Properties Boston. So you're going to see a ton of videos out there about cost segregations. And what cost segregation does is it helps you expedite the depreciation that you can take off of your properties. Typically, it's over a 27.5 year time frame for residential properties and 39 years for commercial properties. And typically that 27.5 year depreciation is the same every year for 27.5 years. Big secret that a lot of real estate investors use is something called cost segregations. Cost segregations will push the amount of depreciation earlier in the first year, as well as in the 5, 7, and maybe 15-year range, but the majority of it gets pushed to the first year. And I see a lot of videos explaining this, but I haven't seen many videos actually showing it. So I'm actually going to show one of my estimates for one of the buildings I'm buying to be able to show you the benefits of doing an actual cost segregation. So here we go. On the screen, what you're going to see is, and the name of the company that helped me out with it is KBKG. Happy to make an introduction at any point. I don't make any money from it. I just pay them and they help me save money. So the additional tax deductions in year one is going to be anywhere on the low end at $385,000 to $500,000 plus, which is absolutely huge and massive. I mean, think about additional, right? And again, they're going to factor in later on my tax rate, and you'll see that this is the total amount, not the actual amount saved, because you have to factor in the taxes. Then what will end up happening is that because of that tax rate of about 40%, they're going to say actual income tax savings is going to be anywhere between $155,000 to $200,000, which is huge. I qualify as an active investor because I spend more than 750 hours a year doing real estate. And let's say I made $155,000 or $200,000, it would literally wipe out my entire income. So I would get taxed at nothing, which is huge, right? Like, what other type of investment allows you to be able to take these type of tax write-offs? Then it'll show additional tax deductions for year 1 to 5, and then that additional tax savings for years 1 to 5. So the net present value after the tax, right, is going to be this amount. And they're always going to help me show the benefit to cost ratio. So in this case, I have a study fee of $5,500. And after the tax, it's going to cost $32.81. What they're saying is that I get a ratio on the low end that for every dollar I spend, I get $33 in return, which is just amazing. They say if you're over 4 to 1, you should do it. For me, 33 to 1 is a no-brainer. So continuing with this estimate, what ends up happening is that it's going to show you both with no study and with the study and the additional taxes. So again, as I mentioned, in year 1, we're about half into the year, so it's only going to be about half of what the normal amount would be. So the normal amount would typically be $62,000, and you're going to see in that first year, instead of me getting $39,000, I'm going to get $424,000, and that additional tax deduction is just the difference between the two. You're going to see in future years, though, that I'm probably going to get less. And I'll show a full chart on that. But it says year 1 to 5 and total benefit of it. So even in year 1, even though I have less than years 2 through 5, it's still beneficial in those 5 years. So let's just keep going. And I love these little maps. Let's see if I can make it a little bit bigger. I love these comparisons. And what's going to end up happening is that they're going to show me both before the cost segregation study and after the cost segregation study. And it's going to map it out for that entire timeline, right? So in this one, we have it over close to 40 years on it. It's a commercial mixed-use building. And you're going to see that normally it's going to be $62,000 flat-lined on it. Now what ends up happening is that you're going to have that massive first year, and then it's going to be less every year thereafterwards, right? Still, it works out to the total amount, same, right? And then it just has additional calculations that it has for the present cash flow. So this helps me to decide, like, is a cost seg worth it for me on this? Obviously, with this one, it absolutely is. It shows me potentially what the range could be. And when they actually do the study, it gives you the exact number breakdown of it. And remember, it is based upon the building itself, not the land. So if we buy $1 million property and I have $600,000 allocated towards my building and $400,000 allocated towards the land, right? They're just going to depreciate that building. So that's what you're going to be depreciating, not the land. So just always factor that in. Don't think you get like the huge depreciation on the total purchase price of it. And in the Boston area, it's about 60-40% on that. Right? So again, really nice to be able to have a company like KBKG. They provide me an estimate for free on their website. They also have it that you can kind of use this cost estimator as well. Won't give a formal report like this. They do it for me because I have some bigger buildings and I do a lot of work with them. But their calculator is great. It'll still tell you and spit out like the benefit to cost ratio and just rough ranges of it. But for me to be able to have a property, a cost segregation can mean the difference between it being like a good investment property and a great investment property. Because for this property, about give or take $3 million, we were putting in roughly about $750,000 in cash on it as 25% of the purchase price. And then again, if I can save, roughly, if I can save $200,000 a year, right, in the first year, that's huge. It changed a property that was cash flowing into something that now allows me to be able to be a negative on the taxes and also help me lower my actual income. So if I bought, let's say I make $1 million and I bought 5 of these, I would have a 0 tax rate, which would be crazy. And for people who aren't active real estate investors, what ends up happening, just so you know, is that it would just sit there and accrue every single year and carry over until it's depleted. So it's really important if you could be an active real estate investor. And I've had other videos about how if you have a spouse, you could potentially, file as active investors if one of you have a active real estate job. But again, I wanted to go over a cost seg, actually showing numbers, not just explaining what it is and the benefits of it, so you guys can see in real time what a report looks like, giving you the idea of both the deduction, the income tax savings based upon your bracket, and the differences between having a cost seg and not having a cost seg. Hope you enjoyed it, and if there's any questions about it, feel free to comment below or DM me, and I look forward to helping you find your next investment property.